Hey, what's up, guys? Houston here. Look, if you're trying to position yourself to get into the seven-figure club, become a millionaire, okay, with your investments and everything, the thing about it, you have to choose the right financial institution, right? Now, here's the thing about it. There's a lot of people that are millionaires, and they're banking with banks, but they really don't understand the banking aspect of why they're banking with them, right? And they assume, well, they just give me money. Yeah, they're giving you money, but you don't know why they're giving you the money, right? And the reason that they're probably getting the money is because of they're using the right business structure or using a business structure that's generating a lot of revenue, and that's what's giving them the money. So they don't really understand that it's about their business bank rating, right? They don't understand about the business credit of things, right? So because they don't understand that, they're not able to maximize. That's the reason you find a lot of people that are millionaires that generate a lot of money, and then all of a sudden, if that money isn't coming in anymore, they don't know how to get any more money, right? Because they don't know how to utilize the banks. Even the banks that they're utilizing, they don't understand the whole process. This is the reason why I've told you guys over and over and over that when I've dealt with clients and they said, well, I made over $1.5 million and this bank won't even give me a loan, right? And when it happens like that, it may be the institution. Remember, I told you there's 4 levels of funding, okay, with institutions, all right? So a lot of the millionaires, if you ask them, who do you bank with? Most of them more likely are going to say Chase, Bank of America, Wells Fargo, right? They rarely say American Express. Again, because they don't know the benefits of American Express, right? But here's the key to this. Because they are millionaires and they figure that they're just making a lot of money, the banks are just continuing to give them money. They don't have any idea, they don't have any idea of them making those large deposits and stuff is what's actually generating the money. This is the reason, and it goes to point out, this is the reason when I tell people, hey, yes, you can have a LLC, but what ends up happening, a LLC, especially as a one owner, your growth stops, right? Because they don't look at it as a growth company. Okay, and so because it's a growth company, and say that you're working a job and you have this LLC, all the revenue that comes from the LLC, you have to count that in with your regular job. So now this pushes up your AGI, your adjusted gross income, and so you end up paying more taxes, right? So, because I see a lot of like school teachers, more professional type of people and stuff, and they may have a side business that's doing very well. But that side business, because it's in an LLC structure, again, they're losing a lot of capital because now they have to create ways in order to minimize their tax liability, right? And that's the thing about it. I told you, with not using the proper structure of a business, you end up paying more in taxes and you end up missing out on raising more capital. All right. So that's the reason I tell you, when you're trying to go for funding, here's the key to it. All right. Going back to the 4 levels of funding. 1, you have, like I said, with Bank of America, Chase, Wells Fargo, American. Those are your first tier, right? Then your second tier would be like your PNC, your Truist, Bank of California, your community banks. Those are your second tier. Your third tier is like your credit unions. So your credit unions like Connecta, like BCU, Baxter Credit Union, like Navy Federal, okay? Those would be like your third. And then your 4th tier is like when you're trying to get funding, is like when you go into like on deck or something like that, right? People that don't look at the credit, they look at the operation of the business, right? Now, even like with PayPal, like PayPal is a fourth tier lender, right? Because when and it comes on the business side, they look at the operation of the business. They don't focus on the credit. They look at the revenue that's coming into the business. And one of the key things in reference to PayPal, when they're looking at revenue, again, having a PayPal business account. So by you having a PayPal business account, if you're generating 15 to 20,000, now you open yourself up to get not only their working capital, but a business loan plus a business credit card as well, right? So now, in terms of the funding aspects of it, you got PayPal. Now, the reason I tell people they should have American Express. Now, American Express, when first starting out as a business owner, they can be more conservative if there isn't high revenue coming into the business, right? So that means that they're giving you less than 10,000. However, on the back end of that, once you have that business credit card with American Express, then that actually opens you up for their business line of credit, revolving line of credit. So with that revolving line of credit, there's no hard pull on the credit. And plus, you can have multiple business credit cards with American Express. Now, I tell people, if I were you, I would not, unless you like a person that travels a lot, then I would not focus on the American Express Platinum and Gold card, right? Now, I would be, although those are charge card, I would focus on the revolving cards. So your American Express Blue Business Cash, that's one of the cards that I would be focusing on. All right, as my revolving card. So looking at all the American Express revolving cards is where I would be putting my focus on. Now, another one, again, because we're talking about millionaires raising money and you're trying to raise money, I'm showing you the back end of this. So we have PayPal because they're going to give you not only a credit card, they give you the business loans, business lines of credit. American Express is going to give you the business credit cards, business loans, business lines of credit. Then you have Wells Fargo. A lot of people don't feel Wells Fargo that much, but here's the thing about it with Wells Fargo. Wells Fargo, they will give a new business a line of credit as well. Okay. Now, usually I tell people, make sure that you're vetting these banks. At least if you're going to open up the business checking account and stuff like that, make sure it's open up for at least 90 days. You have deposits and stuff. Now, for those of you that are in the gig economy and stuff like that, and you need help setting up your direct pay and stuff like that, click the link in the description, schedule a one-on-one consultation, and I'll show you how not only to set up the payroll, but the right way to do it so you can actually recycle that money and continue growing the business on the revenue side of it, okay, while also protecting yourself and expanding the business. Now, going back to Wells Fargo, now Wells Fargo, they put a pause on their business credit card. So now they finally have a new business credit card coming out. But they offer this, they have two types of business lines of credit. They got one business line of credit. You need at least a 680 credit score for that. Now, here's another thing that I do like about Wells Fargo. Say that you are wanting to start a business, but you haven't set up the business yet, then you can go for the Wells Fargo Reflect card. The reason is, now that's on the personal side, but the reason that you want to go for that Wells Fargo Reflect card, because what ends up happening, they'll give you checks to liquidate that card, and the interest on balance transfers and purchases is 0 for 21 months. So you have free money. So that money, you can liquidate that card. And now, granted, it will push up your DTI. However, you can apply for another credit card with them. You can apply for another credit card with them, which is their Active Cash, which gives you 0%, I think, for 15 months. 15 or 18 months. You can apply for that card and just use that regular. That'll bring down your DTI. But that first card you want to liquidate. All right. And then you put that, set up your company. You put that money into your business bank account. Now, depending on the amount, say that they give you 15, 25,000 on that active cash. What you want to do is take 10,000 of that, open up your business bank account. Now, here's something I want you to understand this. You want to go to like a Chase, Capital One, a Citibank. The reason is because those are the companies that on the business side, they report to most of the business credit bureaus. So they're going to report to Experian Business, Equifax Business, shared with Small Business Financial Exchange, and then Dun & Bradstreet is going to pick that information up. Now, you don't need business credit in order to get these. You just need at least a 680 credit card to get business credit card funding. Now, the thing about it, like I said, with Wells Fargo, they offer a business line of credit up to $50,000 with a 680. All right. So you don't have to be in business for 2 years for that. This is the reason why I tell people when you're trying to go get funding, stay away from the loans. Now, here's one lender that if you just necessarily need to get a loan and you have at least a 620 credit score, then you may want to look at DreamSpring. Now, on the backside of DreamSpring, it's a 620, right? They pull TransUnion. It's the loan is distributed through Upstart. Okay, it's a FICO 9. So that's another thing. Also, Wells Fargo is Experian FICO 9 as well. Now, understanding, going back to DreamSpring, they're going to report both on the business side and the personal side, but they offer a line of credit up to $50,000 with a 620 credit score. Okay, so if that will not bother you of the account reporting on the business side as well as the personal side, then DreamSpring would probably be one of your better. Now, you do have Divvy. Now, Divvy, they won't do a hard pull on the credit, but you have to have revenue in the business. Okay, just as well as capital on tap. All right, so those are the type of lenders that you want to look at. Now, again, as a millionaire, trying to find the right banks to make sure that you get the maximum amount of funding, that would be like PNC. The reason that you want PNC, okay, because not only are they going to give you business credit cards, because they offer you a business credit card with 0%, but I think it's